Welcome to our comparison video between the S&P 500 and Russell 1000, two of the most widely used stock market indices. We'll explore their unique features, performance, and ideal users, among other aspects. We hope this comparison will help you understand which index might be the most suitable for your investment strategy. The S&P 500 is a market capitalization weighted index of 500 of the largest publicly traded companies in the US. It's seen as the best single gauge of large cap US equities. The Russell 1000, on the other hand, includes approximately 1,000 of the largest US companies, providing a broader representation of US equity performance. Both indices don't have a direct price, as they are measures of a section of the stock market, not products or services. However, the cost of investing in them differs. ETFs, or mutual funds that track these indices, have expense ratios. Generally, funds tracking the S&P 500 have lower expense ratios than those tracking the Russell 1000, making them slightly more cost-effective for investors. Historically, the S&P 500 and Russell 1000 have had similar performance trends, but this isn't always the case. Individual performance can vary depending on the economic climate and market conditions. It's important to note that past performance is not indicative of future results, and investors should consider their risk tolerance and investment goals. The S&P 500 is ideal for investors seeking exposure to large-cap US equities with a low-cost index fund. The Russell 1000, with its broader scope, is suitable for those seeking a more comprehensive exposure to the US equity market, including both large and medium-sized companies. Both the S&P 500 and Russell 1000 offer secure investment options, as they're based on publicly traded companies that are required to meet specific regulatory standards. However, like all investments, they carry risk. The level of risk is generally associated with the overall market volatility, not the index itself. Support for investors in these indices usually comes from the financial institutions providing the index fund or ETF. These institutions offer customer service for transactional support and may provide educational resources about the index. Both S&P and Russell also provide detailed index information on their websites. As broad market indices, both the S&P 500 and Russell 1000 are scalable in terms of the amount of money that can be invested in them. They are used by individual retail investors and large institutional investors alike. Their scalability makes them suitable for a wide range of investment strategies. Choosing a winner between the S&P 500 and Russell 1000 depends on an individual's investment goals and risk tolerance. However, for cost-effectiveness and simplicity, the S&P 500 may have a slight edge. It's widely recognized, has lower expense ratios, and allows exposure to large-cap US equities. Remember, it's essential to consider your financial situation and consult with a financial advisor before making investment decisions. Thank you for watching our comparison video on the S&P 500 and Russell 1000. We hope you found this information helpful in understanding these two significant market indices. If you enjoyed this video, please like it, share it, and subscribe to our channel for more insightful content. Happy investing!